Hello, everybody. This is Joshua Hayes coming to you with your May 6th stock market wrap-up for you to use on May 7th. First off, let's go ahead and take a look at the S&P 500 index. Go ahead and start there today. As you can see, the index, another strong day. You can see volumes above the 50-day volume average, meaning that it rose on heavier volume today. If we connect this trend line, connecting all these lows, you can see that the S&P 500 remains in a nice, solid uptrend. The only problem is that this uptrend has been so good for so long that we've barely had any pullbacks. I would like to see a nice pullback that would last for more than a few days before going to new highs for the rally to be sustainable and long-lasting. If we don't get a pullback anytime soon, I believe that we're just going to probably eventually just go too far too fast and sputter ourselves out. However, as long as the trend is up, I'm going to be there. Now, as you can see, we're running up to almost the 200-day moving average, and right after that, that former support in 2008 downtrend, which was bad support, became resistance after September, and is going to be resistance pretty soon if the index can get above the 200-day moving average. So it's one to watch. However, once again, though, you can see the market rallies, volumes heavier during the week. And even the couple of red bars that you got here for volume, you can see that the indexes had bullish intraday reversals. Get rid of that last line that we just drew right there. So you can see this entire way up, it's been very bullish, and that's why we've got one stock up almost 50%. We've got another stock up 40% since our longs in March. However, this kind of uptrend from here, March to now, should have produced us more setups that had the kind of setups I'm used to having back in 2002, 2003, 98, 99, that would have broken out and given us more than 50% gains by now. However, I am happy with what we have, because if we just pull back and then can start another leg higher, that's where I'm sure all the 100 to 300 to 500 to 1,000% stocks will come out of. Still, I am waiting for perfect setups and perfect breakouts like I've been used to seeing in every bull market, like I've studied in every bull market. However, at least the Can Slim stocks are working. Let's look at the New York Stock Exchange, S&P 500's brother. You can see same thing. Most important index, though, is the NASDAQ, the CompQX. It's a little sad thing, though, recently, which is why I thought that the rally might be near a short-term top. Look on the bottom pane. See the NASDAQ? Last 4 sessions, if you'll notice, NASDAQ hit a high on the relative strength-wise on 430. Since then, every day in March, the NASDAQ has subperformed the S&P 500, making it weaker, and that's why the past 5 days it's up 2.75%, while the S&P 500 is up 5.25%. So there's obviously some major disconnect starting here, and hopefully that means that either the NASDAQ will start to pull back or flatten out even. That'd be great, and then we can break out. But no matter what, I want to show you today's session in the NASDAQ. See where it opened near the highs, dipped low below the 200-day moving average in today, came all the way back to close above the 200-day moving average by the close, very near the high. That's got to be bullish overall, in my opinion. New York Stock Exchange, look at that bullish bar. S&P 500, look at that bullish bar. So, very bullish. And the S&P 500 is even more bullish because if you look, the low and the open was at 903.95, very good. The close was at 919.53. Just about 70 cents off the high of day of 920.28. So came very close to being open low a day, close high a day, which would have been perfect. Of course, it's always the perfect setups that can get like that. There's a red dot on my monitor. I can't get rid of it. Now it's gone. Now let's look at the S&P 600. S&P 600. Another bullish session. I've got to expand it all the way out and go all the way down, and then we can't tell, but I go all the way out. I can see that it's got a bullish tail. Open at 268, close at 270. But the low day was 265, so it's well off the lows. Very nice intraday reversal. Let's look at the S&P 400. Same thing. And actually now it's just a point or two away from taking out that 200-day moving average. 582.32. If it would have closed at its high of day at 585.19, it would have been above the 200-day moving average. And that's great. But the other great thing also is that look at the 50, the 200 on the S&P 400, and look at it on the NASDAQ. they're getting so close to each other, which means that we're going to have a golden cross. Not the best of golden crosses because the 200-day moving average isn't moving up yet. Still, that becomes a very solid support where you cross. And hopefully the NASDAQ can hold those lows, base out and breakout. That's when we're going to be treated to some of the huge big winners that I am accustomed to in bull markets that we still have not seen yet. Remember, stocks like DRYS, last time that we were bullish in October of 2007, let me go back there to show some of you non-subscribers how it works for me. Normally in a bull market, just using this stock as the most recent example. DRYS was a can slim stock. During this entire uptrend, I had nothing to deal with it. So, you could be like, oh my God, well, Josh, you missed 255% uptrend. You can't buy it up here. You're stupid. You're crazy. Well, I bought it right here as it broke out of a cup pattern or a kind of sloppy, haphazard double bottom wannabe cup pattern. Volume was huge, its biggest volume ever, so I figured it's not too crazy. Arithmetic did look like it was getting a little ahead of itself, but you know what? To me, that looked like a breakout. Why it was, so I wasn't having any problems with it. So I bought the breakout here, and now watch what happens from my buy. Right there. There's where I decided to sell my first major holding, about 33%. There's an 86% gain. Pretty darn good. Oh, look at that now. That looks a little... And now look at it on an F2 now. How could you not think the market was going into a climax top? Look at this stock. Look at this move. I mean, this is insane. It goes from 20 to 120 in about 5 months. It just makes a huge rapid gain. And in 1 year, the stock is up 1,247% at the end of a massive bull market. So you can see this curve in the slope. This is what we call a climax run to a climax possible top. So at this point right here, I was out over half with 100% gain to add on to the 33%. So now I only got about 33%, 25% left. And I could wait for a real sell signal. This was another sell signal. So you get out of more here, missing the top. Still got an 87% gain. Not bad. And then I let it move around a little bit. And right here, that was my signal to go ahead and get out of all of it based off of top. Because as you can see, it was at a climax run. And then all of a sudden, it just died. So, see the climax run it's in? It's going into right up here. Just looking insanely psychotic. And then it ends. But before it could end, I was able to get out with 100% gain, basically 86 to 87% on everything else. And during the entire early 2008, people were like, buy DRYS, Josh. You don't realize it's going to fly. You don't understand dry bulk shipping, somebody told me in a comment area. Yeah, I may not know dry bulk shipping, but you know what I do know? That's a very bearish signal, and that DRYS was not going to rally no matter what they wanted. So while they're still long right here, by the way, from their March and February buys, I'm completely like, you should only be short this stock. And, of course, by October, I was completely justified as it hit below $20, going from a high of where I got out of it at 100% to an 86% loss for 17. Now, I don't know how much for it went down as I quit following it, but look, it hit $3. So from where I sold it at the high day of $130, it went from $130 to $3, and the entire way down, people were telling me, you got to buy this stock. Thank God I didn't, or else I would have had anywhere from a 97% loss to a 50% loss on my position. Since then, I'm sure there's some people that like DRYS, and you know what? Now you've got a reason to be. Now you got a reason. Look at all the max green bop. Look at all the huge accumulation. Look at the great price action. However, unless you got this bar right here, the bounce off the low, confirming that possible support is in, you can't chase it up 30%, 40% off of where, 60% off the bottom. Still, the green bop's beautiful. Max green bop's even more beautiful. Accumulation, price action's great. Got to get above the 200. 50's got to get above the 200. Then it's got a base out, breakout. Then and only then will I be interested in it. I'll show you one of my best longs since you guys can't get it now without chasing it. get rid of all the trend lines. Here's where we went long on the breakout back here in April. This is what it looked like. This is where I take my long position. Boom, breakout, breakout. 1, 2, 3, 4, 5, 6, 7, 8, 9 days. 9 days later, 48% gain. That's how it's supposed to work, everybody. I'm going to go ahead and wrap it up there. Show you how ASCA is not in a parabolic move yet. Compare that to what DRYS looked like back then. And if you don't remember how DRYS looked like, maybe Baidu will help you. Maybe Google will help you. Maybe you don't remember POT and Moss and TNH. Yes. Insanity. That's a topping action. Still ready to break down. I'm going to go ahead and end it there. Part 1, Part 2, and Part 3 will be up next. Aloha.